So a quick one now. First, I want to cover a quick terminologies, quick words that we actually use in trading. Now, first, certain currencies go by certain nicknames, which we'll actually delve into as we discuss. So, moving on to what we'll be discussing today. Now, first is major and minor currencies. Now, for major and minor currencies, there are just 8 major currencies, and a combination of these 8 gives us about 28 major currencies. Now, aside from them, we have the minor currencies. The major 8 we are going to show as we actually start discussing their nicknames. Then, moving on, we have the minor currencies include like the Hong Kong money, the South African rand, Nigerian naira. In short, every other currency in the world apart from the major 8 that we're going to be discussing are all minor currencies. Now, the major 8 are the euro, the European euro, the United States dollars, Canadian dollar, the Australian dollar, the Great Britain pound, and the Japanese yen. I think I've mentioned Swiss franc. Yeah, I've forgotten the name of their currency actually, the Swiss franc. So yeah, I think those are actually all. Those are all. And then moving on to bid and ask price. When we talk about bid and ask price, the bid price is the price at which a customer buys a currency, while the ask price is the price at which you sell. More of this will be talked about when we dive into the charts to explain more on base and quote currencies. We will talk about that, so watch out for that. It's still on this video, so at the later end of the video, so stay till the end. And then we have bears and the bulls. So we have, when you hear them say the market is bearish, it means that we have the bears in the market. We have people that are looking for the market to sell, and if the market is bearish, it means the market is going down. And then if we have a market that is going up, we say the bulls are in charge. That means the market is going up, so it's bullish. Now, I know I've had a number of people say, why do they say bears and bulls? And for me, I actually came up with the concept of how these two animals tend to fight. When a bull attacks, they always hit with their head, and most times the direction of the hit is always upward. And in the case of a bear standing on 2 foot, it always uses its paw to hit downwards. So I think that was where the concepts came from, and kudos to whoever came up with these ideas. It was nice. Then moving on to spread. Now, the spread is the difference between the bid and the ask price, but let me keep it simple. What spread actually is the fees that your brokers will charge you when you make a buy, when you place an order, be it a buy order or a sell order, be it a bid or an ask. They are going to always charge you. Now, something I forgot to add is long and short. A long order is a bid order. As you can see, we have bid up here as well. We already have bid somewhere in here. So a bid is also known as a long order, which is a buy, and an ask order is known as short, going short, which is known as a sell. Now, in the case of XL is known as stop loss. So it is basically a price that you put in on the chart, telling your brokerage that in case I should take a loss on this order I am placing, take me out at so amount of loss. So if I place an order with about 1 lot, I can put in a 10 pip stop loss, and I tell my brokerage, should I entertain $100 loss, please end the trade. Okay, so the moment we have $100 loss, the broker automatically collapses the trade for me. And in the case of TP, is known as take profits. In some cases, is known as target profit. So whichever word you want to use, feel free. Now, what TP is for your profits. So I'm telling the brokerage, should in case I have profits up to $500, $200, $300, $1,000, whichever amount, and if it is in a small account, let's say $10, $5, $3, $4, please take me out of the trade. That is what I'm telling my brokerage. So the moment it happens, they take me out automatically. Now, in the case of BE, is also known as break even. So it is, let's say I place a trade and I'm risking about $100 in it. So I'm using a standard lot. Maybe I'm using a standard lot. It's not a must. It has to be a standard lot. Let's say I'm using a standard lot, and I have 10 pips as my stop loss, so that means I'm risking about $100, right? And this trade I place moves into profit of 15 pips, so that means I'm seeing $150 floating on my MetaTrader 5. And right now I see that I have made some money, and I have two options. One is to take the profit, two is to allow it to go back and tag me out. But tag me out for a loss of $100. One thing I can do is go for option number 3, which is allow the trade run but don't risk anything. So basically what I will do is I will go to where my stop loss is. I will check what my entry number is. Let's say my entry number is 183.5. So I will go to my stop loss, I will delete the number there, and I'll put exactly my entry on it. I will also account for spread. So if the spread is maybe 2 pips, that was what the broker charged me, I will add 2 pips to my stop loss to show that I've accounted for the spread that the broker charged me. So now I'm getting back. Should in case the trade goes back into a loss, it's going to tag me out at that little profit, so that way I know I paid the brokerage but I lost nothing in the trade. So in break even, it is no lose, no loss, no win. Okay, that is break even. Then what is a brokerage? Now the brokerage is basically the middleman, our forerunners, the guys that are in the market, the ones that places the trade when the actual order, those that process our orders. They are in charge of processing every single order you make, every single buy or sell that every customer is making is being done under brokerage. Now there are different brokerages. There are behind the desk, there are on desk brokers, there are and most behind the desk brokers, I think, yeah, those guys are regulated. Now there are regulated brokers and non-regulated brokers. Now before you started this class, you may have had 2 recommendations of brokers that I've called out to you. There are many more that I can give you. There are about 4 of them that I use, and these 4 are because I have taken my time to test them, so I know their flaws, I know what makes them good, and I know what makes them bad as well. So but these guys are well regulated and have been in business for close to 10 years. So first thing you want to figure out about these platforms is, are they really regulated? So moving on, of these brokers, as long as they are regulated, you should feel at peace trading with them. But if they are not regulated, they can literally send you to the village. Yes, your broker has the power to change where your entry is. They have the power to ignore your stop loss when you are in a loss. They have the power to even ensure your trades don't close when you want it to close. You get me? So being with a good brokerage will really save your life. And then moving on, Trading View. It is literally the software we use for analyzing the market. It's far better than MetaTrader 4 and 5. So if you're doing your analysis on MetaTrader 4 and 5, you're doing yourself a disservice. There is a whole lot of benefits that comes with Trading View that you cannot get until you master it. So go on and start making use of the Trading View app. I have noticed that majority of my losses as a trader have come from majority of the trades that I took from MetaTrader without analyzing them on Trading View. So please maximize your use of Trading View platform. Then going on to MetaTrader 4 and MetaTrader 5, these 2 apps are very wonderful. It is quite confusing if you don't know much about them, but what we use these 2 to do is just to place orders. You can actually use them for analysis, but they don't have so much tools that you can use as a professional trader. So feel free to use them just for placing your orders. Okay, with that, a video covering how to make use of them, how to place orders on them would be done as well, but that could be later on because the market is already dead now. But I'll try as much as possible to do that even with a dead market, because today's Friday. Now EA, they are known as expert advisors. They are basically built AI robots, so they can do a variety of things. The MetaTrader platform on laptop, on PC, has the ability to run robots. Each robot is programmed by a programmer to do a certain type of duty. Some program theirs to make trades, some program theirs to handle calculating their losses and their profits, some program theirs to do a whole lot of things. Meanwhile, that's expert advisor. That's basically what they are. So now let's move on to understanding the final thing, a base and a quote currency. This one is very important that you know it. So let's move on to the next screen and actually discuss that. But before we do that, let's touch down on the nicknames for currencies. So we have here, first one we have code USD. These are our, okay, I said it, I knew I was forgetting one, the New Zealand dollar. So these are their codes, USD, and we have it United States dollar, nickname green box, euro, country Eurozone, and as you can see, currency euro, fiber. Feel free to have this in your head. This is the Japanese yen, this is Great Britain pound. We call, most of the time, just call this GBP. I don't have so much time about for this. This is the one I know we always use. This one we always call this the Swiss franc, or we call it CHF, or call it CHF. This is CAD. This is the Canadian dollar, also known as loonie. This is Aussie or AUD, and then we have NZD or Kiwi. So these are all pairs that you can use. So this is the fiber, the yen, the cable, the Swissy, the loonie, the Aussie, and the Kiwi. So there's Kiwi dollar. So if you have NZD against the dollar, we can call it Kiwi dollar. AUD against the dollar, we can call this Aussie dollar. I've given you names. Feel free to memorize them and make them part of your daily life. Anyways, let's move on to the next screen. Okay guys, so as you can see, so let's quickly dive into this one. So we have GBP/JPY, right? And for this we can see we have two currencies attached. The GBP, this is the first one. This is our base currency, meaning that all the prices we have here are talking about this guy, how much we can buy this. But then we have a second currency, so these prices here are denoted in this. So all of these are Japanese yen prices, are in Japanese yen, but they are telling you how much you can purchase or sell the Great Britain pound. Okay, so this price is quoted in Japanese yen. Okay, but the base for the quote is our Great Britain pound. I think that English is actually too thick even for me. Okay, so basically what that means is the price we have in here is talking about this guy. Okay, so it's telling us how much we can purchase Great Britain pound at the moment. Now as you can see, this is the bid. So if I hit a buy right now, I'm going to be buying. The order will open at 181861. Okay, but in the case I say I want to place a sell, the order is going to open at 181695. Are you seeing the difference now? Now if you take your time to check this, you see that 86 to 69, there is a whole lot of numbers in between them. Sorry, it is very large because it's actually, the market is closed, so the spreads tend to widen once the markets close out. And as you can see here, the difference in the numbers here is very close to 16 or 14, I think. Yeah, around 14. It's 14. If you look at that, we have close to 14, is it? Sorry, it's actually 17, close to 17 or 16.5. That's the difference in this number and this number. That is the amount the broker is going to charge you if you decide to open an order now. Be it a buy or a sell, they are charging you 16 pips straight up, and you are lose. So if you're opening a trade with one lot, I always do my examples with one lot, so please, if you're placing a trade with one lot and it's opening at 16 pips, it means that your trade will be opening at minus $160 just at the opening. You have not, the trade, the market has not even moved, so you're already suffering that huge of a drawdown on that kind of account. So that is basically, so how spread really matters. This is another thing your brokers will do for you. A good broker will give you a good spread. A very bad broker is going to give you a very bad spread, for which I have noticed on TradingView. Their demo here, the spread in here is going to send you to the village, send you packing with full speed. It's so wild that it's disastrous. So feel free to make use of the brokers that we recommended in the classes, and you'll get used to this, as you would always see two numbers like this on your MetaTrader 4 or your MetaTrader 5. So don't let it confuse you. Just know that one is the ask. The ask is your sell order, the bid is your buy order, and then yeah, that should be basically all for this class. So we'll be moving on to another one, and see you on the next video.